What's going on, guys? This is week 27 of real estate Q&A sessions. Every week, every Thursday, 12 o'clock, we are here, week 27, 2 and a 7. Yes, we've been consistent, and that's what we're going to continue to do. So yes, welcome to the real estate Q&A sessions every Thursday with me, where you guys get to ask anything, everything real estate related every single week. Doesn't matter what it is. I do my best to make sure I answer it. So appreciate you guys for always showing up and showing out, asking questions, coming here with inquisitive questions and things like that regarding real estate. So again, remember, you can ask me anything, everything real estate related, anything that you might be going through as you're trying to buy your first house, maybe, or maybe you're in the process of buying your first house, or maybe you want to start getting into rentals, or you want to do flips or anything like that. This is the place to come where you can ask questions pretty much to your liking. So welcome. We're going to give some time for folks to come on and file in. You guys already know how it is. I am late today. I am late. I usually do 12 o'clock, but I was out and I was trying to get home, and I did not want to do the show in my truck. I've done that a couple of times. I'm not really a fan of it because I like being here when I do my show. So I kind of had to wait a little bit. But anyway, outside of that, we're still here. Appreciate you guys for showing up. We already got one person. Who's the first person up here? S. Smith. Appreciate you for showing up. S. Smith 13. Other folks will probably follow here in a little bit. As you guys already know, 12 o'clock is usually my time. And I don't know if folks were waiting on me, because normally people pile in at 12 o'clock, but it's all good. We're still going to do the show. It's still going to be an hour. And obviously you guys will have as much time as you need to ask anything or have me discuss any specific topic that you'd like. What's good, bro? Yeah, hey man, look, I'm just living, man. It's it's a crazy world right now. And I don't know about you, but I have been trying to put my mind on other things. Somebody's calling. So anytime people call me during this show, I'm not picking up. I know that was an important call, actually, from a lead, but I'll call them back. But anyway, yeah, I've been trying to keep my mind off of what's going on. It's kind of hard to do that, given the fact that this thing has been dragged out for 3 days straight now. So, it doesn't really help. But, it is what it is. Doing the best I can to mind my own business and continue to, work on my business and the other things that I'm doing, the other business as well. So, it is what it is. Folks have asked, oh yeah, what is the real estate market going to do when, Mans is out here and, let's say Biden wins or whatever. I'm like, look, I don't know. At the end of the day, I'm going to deal with whatever market the market gives me. You know what I'm saying? It is what it is. I mean, you can only control what you can control. And whether Biden or Trump's in office, of course, I would like Biden to be in office. But whether Biden or Trump is in office, houses are going to sell. And they're going to go on the market. So it is what it is. But other than that, appreciate y'all for showing up. We got Devin in the building. Who is this? Byrene, that is a very, 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 very long username. But appreciate you showing up again. What's up, guys? Again, I started late today. Again, I was out doing some stuff and I did not want to do the show in the car. So that's why I had to wait. I know I'm late, but either way, we're still here. Week 27, real estate Q&A sessions. If you guys want to ask questions, there's a little question mark thing right there. Drop your questions there or put it in the comment section. I'll answer anything from there or in the question mark little spot or whatever. Doesn't matter to me. It's up to you guys. But again, every Thursday, 12 o'clock, we're doing the same thing every week consistently. I know last week I kind of got in depth with the calculating your ROI for potential deals. I don't know if you guys took notes on that, but that's something that you probably should look at or go back and look at if you are in the market of looking at deals and trying to figure out whether something is going to be worth your time or not. As a developer, because I don't know if you guys know, I'm taking a developer's class. taking a developer's class right now, real estate development. And for larger projects, you know, when you start seeing these multi-units, these huge mixed-use buildings and stuff like that, that's what I'm learning how to do right now in class. So as a developer, the kind of the preliminary calculations of a deal, whether it's going to be worth your time, is called like a back of the envelope pro forma. And that's kind of like what that is, except that's for single family rentals. That's for smaller deals. You know, that's something that would be very beneficial if you guys are out in the market looking for you know, rentals. So go back, check last week's video out, and in there I have the calculation. In fact, I think I still got it up here on the board. I have not changed it. I've also been out of town, like for the past 12 days. I've only been here 2 days. So, and one of those days I was actually here and I did the show. So again, go check out last episode, so you can get the calculation. So if you are running in the rentals and you are looking at deals, very easy equation that you guys can use to figure out whether a deal is worth your time or not, right? That is the name of the game. A lot of sucker deals out here. A lot of deals out here will, you know, are meant for suckers. You know what I'm saying? And, you know, look, don't be that person. Right? I've bought bad deals before. It's not a good feeling, right? And sometimes you don't even know it until it's time to, you know, refinance or try to flip and sell it. You know, you find out that, hey, maybe I bought this thing a little too high. That's why you have to run your numbers beforehand. If you guys didn't know, if you are dealing with wholesalers, or even if you're dealing with real estate agents or brokers, you always want to be able to know how to run your own numbers. Because at the end of the day, nobody is going to sit there and nobody's going to answer for your mistakes besides you, just you, right? So if you're on the market and you're getting, you know, you're talking to, you know, wholesalers, and they're sending you deals in your email, and your email's just stacking up with, you know, people trying to sell you deals and stuff like that. And they're like, oh yeah, the ARV is this, and, you know, the repair value is this, and here's the purchase price. That's all fine and dandy. Actually, none of those numbers matter. You know, none of those numbers matter, and they shouldn't matter, right? Because you got to run your own numbers. Not even the purchase price matter. I don't really care what you want, right? What's going on, MK Mobile Home, the mobile home plug? It's been a minute. It's been a minute since you've been here, but appreciate you for showing up all the way out. And I think Arizona, I can't remember. And if you're in Arizona, I hope you're helping counting them votes, because we waiting on the East Coast. We waiting on y'all. So appreciate you for showing up. Byrene, thanks for the advice. It's very useful. Hey, appreciate you for showing up, man. I can't say it. Garand, please forgive me if I do misspell or mistake your name on here. You guys know what it is. Politics and poetry. What's going on? Appreciate you showing up, my brother. Yep, Arizona. MK Mobile Home Plug is in Arizona, and I hope she's helping to count those votes. Or, yeah, what's going on with y'all? Yeah, I count real slow. We trying to hurry up. Shafiz, what's going on? Appreciate y'all showing up. Hey, look, we got some people up in here. So again, yes, if you guys are new here, if you guys never been here before, this is Real Estate Q&A sessions every Thursday, 12 o'clock, 27 weeks consistently. I ain't playing no games with y'all. This is free knowledge, free gems for y'all. You can ask me anything, everything real estate related in terms of what you want to do, what you aspire to do, what you're currently doing. You can ask right there below. Again, this is for y'all. This ain't for me. Only thing I ask is housekeeping. Snapshot this, post it on your story, tag me, and let folks know what we're doing each and every week, because we get value out of other people coming in here and asking questions that you might not have known to ask, right? I can talk my ass off for an hour or 2 hours about real estate. I can go on and on and on and on and on. But the real value in this is this created space that allows other folks to come in, ask questions that you might not have known to ask if you're going through the same process as them, whether you're buying your first house, your 10th house, you're renovating your first house, 10th house, you're trying to wholesale, any of that stuff, right? That's what you come here for. That's why you invite other people to come here as well, so you can get that value out of it, right? Because this is a space where guess what? You're not having to pay for information. You're not having to pay for knowledge. You don't have to do any of that stuff. You're not going to go seek a coach out. You're not having to go run down an agent and figure, oh, let me ask you this. And in order for you to do that, in order for me to give you that information, I need you to sign this contract. You don't have to do none of that here, right? Basically keeping it funky with y'all, providing that real value. So yeah, I think, where was I at? So yeah, feel free to ask your questions below. Other than that, I'm working on this deal. Well, I'll just go ahead and talk while you guys are not asking questions. But anyway, there's this deal, and here's how crazy things work, right? So you don't necessarily have to, if you're looking for off-market deals, there's a difference between on-market deals, off-market deals, right? On-market deals are deals that are listed by agents. They're on the MLS. And these are the deals that if you go to a real estate agent, say, hey, I want to buy a house. These are on-market deals. They're listed by an agent and a broker, right? These deals are usually marked up. Not saying that all deals on the market are marked up, but most are marked up because guess what? It's the agent's job to make as much money as possible for the client. Right. So in that regard, you're not going to find heavily discounted homes, rehabs, distressed houses on the MLS. Right. Because, again, it's the agent's job or the bank's job to make as much money on those properties as possible. Right. So that's on the market deals. Right. You got to go through an agent in order to get the offer through and all that kind of stuff. You're competing with thousands of other people. Right. And again, the deals are marked up. They're not heavily discounted, which is what you're looking for, right? If that's the name of your game. If you're looking for turnkey, then you're probably going to spend a little bit more money. Perfectly fine, right? Then you have off-market deals. Off-market deals, guess what? You can't go to an agent to find off-market deals. Some do. Some have a little catalog of off-market deals that they work and only send out to their close little investor network via email. But most don't, right? And off-market deals are people that are selling their house that aren't on the market. How are you going to find those people? You got to market to them, right? How do we market to those kind of people? How do we market to off-market deals? It's usually mail, phone calls, texts, voicemails, knocking on doors, whatever, right? People find all types of ways to market to off-market sellers to let them know that they are investors and they're willing to buy, right? So that's on-market deals and that's off-market deals. I'm just giving you guys a little story, right, about how if you want to get into this game and you want to do like off-market, you want to look for off-market deals, you have to be willing to put yourself out there, right? Whether that's cold calling, whether that's putting up bandit signs, whatever it is, you're more than likely going to have to put yourself out there in order to get people to know that you are an investor and that get them to know that you're interested in buying and or wholesaling their home. Because if they don't know who you are, how are you going to get any deals, right? So a lot of things are going to cost you, right? What costs when it comes to off-market marketing to off-market properties? Damn near everything, right? Your mail is going to cost. Your text is going to cost. Your voicemails are going to cost. Your PPC, which is pay-per-click marketing online, that's going to cost. SEO, all that kind of stuff is going to cost. There's only a couple things that's not really going to cost you anything, right? And one of those things is driving for dollars, right? Driving for dollars is basically where you hop in your car and you ride around a specific zip code. I ain't say the city, right? I didn't say the city. If you're looking for off-market deals, you need to locate 3 zip codes in your city and focus on those 3 zip codes. Not the whole city. Keep in mind, listen to what I'm telling y'all, right? 3 zip codes, preferably close to you. That's within 30 minutes from you. That's what you want to look for. You want to look for a zip code where, there's a lot of activity and stuff like that. And you want to focus on those 3 zip codes. Hell, even 1. Because broadening out your range for a whole city is too much, right? You need to focus on 1 zip code or 3 zip codes and become the masters of those 3 zip codes or 1 zip code. Become the master, do some deals in those zip codes, figure, know what the numbers are and all that kind of stuff, know the streets, and then you start branching out, right? And the reason I'm telling you about all this is because you go to your zip code. We're talking about driving for dollars, right? Let's say let's say you live in wherever the hell you live, Arizona, right? And, MK the Mobile Home Plug, I'm pretty sure knows this, right? You focus on one zip code or a couple zip codes or a specific area. And if you're doing like driving for dollars, guess what? You're going to that zip code in that area, and you're going to go drive, you're going to spend money on gas, and you're going to spend an hour maybe riding around different neighborhoods, and you're going to find homes that look distressed. Mail popping out the mailbox, overgrown grass, looks deteriorated, looks, chipped paint. You guys know what those bandos look like, right? And sometimes houses are abandoned or distressed and they don't have that traditional bando look, but that's what you're looking for. And you're going to write those addresses down and you're going to create a list, and then you're going to skip trace and you're going to contact the owner. That's a free way. Well, not free, but you're paying for gas, right? Paying for gas on that. $20, $30, whatever, right? It's better than paying $1,000, right? And guess what? You can always go buy list. You can go buy list of homeowners who basically, if you're targeting a specific demographic or type of people or income or area or whatever, mortgage rate, whatever, you can buy lists of leads, and it's going to cost you, right? I'm trying to give you a way to where it doesn't cost. And guess what? When you go and buy those leads or those lists, there's thousands of other people's buying the same leads as well, right? So this is a way, driving for dollars is a way to create your own list that other investors probably aren't poaching on either, because it's going to take, it would have had to have taken them to go out and find that house and do the same thing you're doing to find it, right? So your list can be very, 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 very unique, right? So driving for dollars is something that's going to always be valuable in the investor community, because it enables you to find houses that are not necessarily on these lists. These lists online that investors buy. So that's what makes driving for dollars key. The thing about driving for dollars is you got to be consistent, right? You got to go out there and you got to, find houses, right? I mean, if you're riding around, if you're doing Lyft, you're doing Uber or something like that, that's very easy, right? You're always going to be riding around in specific areas. You take the address down and you keep it moving, right? But that is a free source, right? That is a free way to go find off-market deals. If you're looking to do any, if you're looking to do any wholesaling, this is a perfect way to get in the game, right? With as little skin in the game as possible. Right now, you can go and create mail campaigns and, voicemails and texts and, all that kind of stuff. But that stuff costs, right? If you don't know what you're doing, and you're kind of like, you're just kind of trying to get your feet wet, then that's probably not going to be the best route. People do it. There's nothing wrong with it, right? But before you spend money, you at least need to know what you're doing, right? And there's no problem going and spending money and then, trying to figure it out. Hell, you got to figure it out, right? But what I'm saying is there's free ways to go do and find these homes that people are putting under contract and wholesaling, or putting under contract and buying, or putting under contract and flipping. So, free way, right? The other free way is literally knocking on doors, being observant. And the whole point of why I'm saying all of this is because in the summertime, I had I do all market marketing. I pay for marketing. I have a VA, every day, I'm doing some type of outbound calling, voicemail, whatever it is, every single day. For 5 days a week. But the reason why I'm saying all this is because this summer I was at one of my rentals that I purchased. And I was going to cut the grass. I went to cut the grass, and across the street, very nice area. I would buy 10 houses in that area if I could, because it's highly appreciating. The houses are small, they're quaint, they're easy rehabs, they're easy fixer-uppers, and they get a decent amount of rent. And there's also a development that's been constructed across the street. It's right next to a hospital. I love that area. So I just so happened to be there cutting the grass, and I saw the neighbor across the street moving junk out of his house. And I was like, I didn't know whether he was a neighbor or a tenant. I thought he was a tenant. Right. And also, guys, feel free to drop questions below if you're listening or anything like that. Again, I will talk my ass off. But this is really for you guys. This is how you guys are going to get value, by asking questions. So I'll talk until questions get asked, pretty much. But anyway, again, real estate Q&A sessions every Thursday, 12 o'clock. Screenshot this, share it to your story. Let folks know what we're doing. Screenshot me right now. Let folks know what we're doing. Anyway, back to the story. So talking about free ways to market. So I see him moving. Stuff out. I literally like, the house looks a little beat up, and I'm looking through the door, and the door inside the door from the street looks kind of messed up, you know? And so, MK the Mobile Home Plug's got a question. I'm gonna finish this story real quick. I'm almost done. So I'm like, okay, well, you know, maybe he's a tenant and he's moving out, which means the landlord is not going to have a tenant in. And I can tell by the condition of the house, the landlord has not been keeping up with the house. So maybe his tenant's moving out. This is the prime opportunity for him to sell if that's what he's interested in. Right. So I asked the tenant, I said, hey, are you moving out? You know, what's going on? He said, yeah, I'm moving out. I was like, oh, okay. You were renting the house? He was like, no, this is my mother's house. You know, I'm moving her stuff out of here. And I said, okay, what are you gonna do with it? He's like, I'm planning on selling it. I said, well, you're talking to the right guy. Dang. So anyway, we ended up wrapping, and he ended up showing me the house. Inside the house was a complete dump. If you guys have never smelled old cat piss, I always have problems running in the house that smell like cat piss or dead cats. You know what I'm saying? Like, I don't know what it is, but I've been cursed. I've been literally cursed when it comes to just cats. Like, I'm not going to tell y'all today because I'm going to make this a separate video. But my worst house, I walked into a house with 12 dead cats. I'm rehabbing a house right now that had 2 dead cats in it. And as soon as I walked in, I knew the smell. I knew exactly what it was. So fun treasures you find in these houses, guys. But anyway, the whole point of that was that, long story short, he told him I was interested in buying it. Some time went by. He texted me last week and said, hey, you're still interested? I said, yes. And he was trying to get 120. I got him down to 80. We're working on it, getting a final agreement, but that would be great if I could have 2 houses across the street from each other. I would love it, right? I'd have to renovate it, but still having 2 houses across from each other in that area at those price points that I got them for, and considering the ARVs in that area, they're gonna be great deals. Well, one's already a great deal, so I'm hoping I can get the other. So the whole point of this is that's free. I did that for free. I didn't have to go spend money to find that guy, right? Now, by chance, yes, but I took action, and I put myself out there. That was the whole point of what I was talking about earlier, is putting yourself out there, right? If you're going to do off-market marketing, you're going to have to put yourself out there to some degree, right? And so you have to go talk to people, right? If you see something, if you see a house that looks distressed, you see a homeowner out there, hey, if you're ever interested in selling your house, let me know. I was driving by, it looked nice, just let me know. Like, those are the kind of things that are going to get you the home run deals, right? Because all these other deals is on the market, they're marked up. All these other deals that come from leads that are on the computer, the competition is so stiff that by every lead is being touched by at least 10 investors, right? You have to find a way to differentiate yourself. So doing what I did, right, putting yourself out there, maybe door knocking or something like that, is going to differentiate you from everybody else. And it's going to probably end up being a house that not everybody else is hovering over or bombarding the homeowner with mail. So just letting y'all know that, be persistent. That is a free way to go out and find deals. Let's get back to mobile. We got a thumbs up from Herdy. What's going on, brother? J. Lou, how you living? MK the Mobile Home Plug says, how do you go about purchasing your properties? Sneaker Fiend, what's going on? Appreciate you always for showing up. Salute Sneaker Fiend. Anyway, how did I go about purchasing my properties? Multiple different ways. A couple different ways. I've used banks. I've used bank loans, right? I've used the FHA product before. I've used a conventional product before. So FHA, you guys know what an FHA loan is, right? Thumbs up, thumbs down, let me know. So I've used a FHA loan before. I've used a conventional loan before to purchase a property. You guys know they're both bank loans, but they're two different types of bank loans. I've also bought cash before. I've also, majority of my homes are bought with hard money. Sorry about that. There's a huge truck backing up into the alley next to my house, and they have that little horn. Anyway, what was I saying? Oh, and hard money. Hard money is what I use to buy a majority of my deals. And so I've done a lot of different types of financing. There's not one that works better than the other. It's really just dependent on the situation and the deal itself and your intent. For my deals that I'm, renovating, more than likely I'm using hard money, because I am able to get that construction piece of the loan, even though it's a short-term loan. So I use hard money to do any type of deals where I'm doing like renovations or anything like that to a property. And then like conventional is more so just for the initial buy and also for the equity. And also because also it's a long-term loan, but you don't get the construction piece in there, right? FHA, you're using FHA for the low interest rate, the low down payment, and then if you get the 203K leg attached to it, there's your construction piece, right? And so that's a great product as well. So, and then cash is cash, right? Cash is king, right? Once you buy that house, it's just yours, right? There's no bank, there's no mortgage on it. It's just yours, right? And you're hoping to get that return back in whatever time frame you're anticipating on getting it back. But once you buy a house cash, guess what? You're not worried about banks. You're not worried about, anybody else. Maybe you want to refi out, maybe pull all your money out, and if you bought it right, maybe you buy it cash and then you refinance out of it into a long-term product, and you just took all your money back out of the deal. And so it's, instead of it sitting there, because once you buy cash, that's it, right? Once you sink that $100,000 in that property, that's it. The only way to get it back is if you refinance, and if it refinances for the value you need it to. So you refinance, you pull all that money back out. Guess what? Rinse and repeat. You go buy another house, right? Use that equity and that money you just pulled to refi, and you go buy another house, right? So those are the different types of product ways I've bought houses before, refinances and all that kind of stuff. Yeah, multiple different ways. How the hell do you find hard money lenders? I've had this conversation before with you guys as far as like hard money lenders. Hard money lenders are pretty much everywhere, right? You can find hard money lenders anywhere in pretty much any city, right? Now, obviously, if you go online and you type in hard money lenders, there's going to be a boatload of hard money lenders that pop up on your feed. You damn right, Ish. Consistency. Wait, 27 weeks, baby. We out here. Look, I be chilling now on these things. But yeah, so find a hard money lenders. You go to Google. I mean, you can go to Google. If you type in hard money lenders, you're going to get a bunch of hard money lenders, right? But here's the difference, right? There's national lenders, hard money lenders, and then there's local hard money lenders, right? You probably want to go with a local hard money lender, right? And that's just my advice. I'm not telling you who to pick. I'm not telling you who to choose. Whatever, I'm giving you just options on what I feel like is going to be the best for you and your deal. The reason why you're looking for local hard money lenders is because they probably and most likely 100% know the market, right? If you're new and you're getting into this game and if you listen to what I said earlier, what I say, focus on 3 zip codes or even 1. Right? You want to focus on 3 zip codes or 1 zip code. Become the master of that, right? your hard money lender's probably done deals with a lot of other investors, right, that have worked in specific areas, worked in specific zip codes, so they know those areas, right? And so you might not be familiar, but they're familiar, right? And the reason why that familiarity is important is because you want them to let you know whether a deal is going to suck or not, right? I'm going to give you guys one of the best words of advice that I've ever heard, right? Just in real estate, right? The best deal you can do is the deal you never did. Sorry about that. I'll say that again. The best deal you can do is the deal you never did, right? So that's important because when you're talking to hard money lenders, you want them to know whether you're going to be able to get your money back out of that deal or not, or whether you're going to be able to flip that house and make the money back to pay them back, because you have to pay them back. Right? And hard money loans are expensive. They're expensive because of the convenience. Where else are you going to go and get $100,000 and $50,000 to buy and renovate a house in less than 2 weeks and be able to close with no inspections or contingencies? Nowhere, right? Unless you got your own bread. So hard money, yes, is very, very, very convenient. It's very, very, very available. But it comes at a cost, right? And that's just the cost of business. People like to shy away from hard money just because of the interest rates, but it's like, it's bridge money, right? If you're using it, if your intent is to use it to get from point A to point B, then who cares what it costs? You want to get from point A to point B, right? Don't step over dollars to get pennies. You know what I'm saying? People have this bad idea of what hard money is, and I don't, not saying I don't like it. People are entitled to their own thing, but right, it's an instrument, it's a tool, right? And you can't expect to get everything for free out in this world and not be taxed or charged in any way, shape, or form, right? It's just like me, right? I give you guys this information for free, but if we was to, if you wanted some extra over insight and all that stuff, it's going to cost. You know what I'm saying? It's just like hard money, right? If I'm going to give you $100,000 to purchase a home and then $50,000 to renovate it, and you can close on your deal in 2 weeks with no inspections and contingencies, you damn right. You're going to pay an interest, a high interest rate. It is what it is, right? That's the cost of business. Get away from the whole idea of thinking that hard money is bad. It's just another instrument tool to use, right? Anyway, I was going to get off on a tangent. But the whole point of looking for a local lender is to make sure that they know the market, is to ensure that they know the market, and that if you bring them a deal, they can tell you, no, this is not going to work. This is not going to work because we know this area. We know what happens in this area. It might look great, but then this pops up, whatever. You want your hard money lender to be able to tell you no, right? Because the last thing you want is to get a hard money loan with the high interest rate and then get a deal and your hard money lender does not care about you. And they say, oh yeah, go do the deal. And then you buy the deal and then you try to renovate it and you try to flip it. You get done with the renovation, you try to sell it for X amount of dollars, and the house don't sell because you had no idea that when you're looking at your comps, you're looking at 2,000 square foot homes and your house is 1,500 square feet or 1,000 square feet, and just because they sold for the same, you think yours is going to be able to sell for the same, and it doesn't, right? XYZ, blah, 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 blah. There's a lot of that goes into it. And so having a hard money lender that is essentially invested in your deal, not just to make money off you, but to make sure your well-being is thought of, is an added layer of security. Not saying it's foolproof, not saying they're foolproof, but it's another it's just another blanket of security before you actually purchase a deal, right? Here's what I do. I have a local hard money lender. He's here in Baltimore, right? They've done thousands of deals with other investors and things like that. I've brought him deals before in areas that I thought that I could get this specific amount of money. And then they've come back to me and said, hey, we see the numbers, we see what you're proposing, but that is not probably going to happen because in this area, buyers are less likely to blah, 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 right? That's what I want to hear. I don't want a hard money lender or somebody's going to tell me that, oh yeah, the deal is great, or any deal I bring them is great, because guess what? I might find myself in a bad situation. And that's the whole reason why I said local lenders are going to be your better bet than national lenders. Can y'all guess why I don't want to go with a national lender after I just gave you guys that spill? Let's think about it. Oh, because they're not in your market. They're probably somewhere in North Carolina or Arizona. You're in Baltimore. You're in Jacksonville. You're in Miami. You know what I'm saying? You're in New York. You know, what do they know about the market? They can look at the numbers, but what do they know about the market outside of what's on the internet? You know what I'm saying? And what they're able to pull up off of, whatever. Who knows what they're using? So that's my point, right? If you want to find a local hard money lender, where do you find them? You may ask. Where do you find hard money lenders? First of all, go on your nice contraption phones, guys, and go to download an app called Meetup. If you don't have Meetup already, go download it. If you have it, you know what I'm talking about. Go on that search bar and type in real estate. There's probably going to be a million things that pop up, meetups that pop up in your area. Investors do these, right? Coaches do these, where they host real estate meetups every month in your area. And there's multiple. Sometimes there's a couple notable ones that usually are every single month, the same week, same day, every month. Right? I guarantee you, whatever market you guys are in, there's meetups going on all the time throughout the month. You want to find a local hard money lender? Go to those meetups. Right? Guess why they're there? They're there because you're there. People like you are there. People like you are there to learn from whoever's hosting the meetup about real estate or whatever, and you're also there to network, right? So guess what? Their clientele is right there in those meetups. So guess where they're at? They're there. They're talking to you. They're trying to get more clients. They're looking for people like you. Hard money lenders are looking for you guys, right? And it's not so much because they want to take advantage of you. It's because they don't make money unless their money is out there on the streets. They don't make their money denying people left and right and, being really selective with who they, lend to. Some do, right? The more notable ones, the ones that got their own money are lending with their own money. But the majority of them are looking for more clientele. That's the only way they make money. Got to flip that bread, right? So that's why meetups are a great place to go, and you can also meet a lot of different other people, right? At meetups, right? And you can learn a lot from other people. So in this real estate game, your network is cliche as it sounds, is everything to you, right? If you don't know anybody, if you don't know any contractors, or you don't know anybody that has contractors, or if you don't know any hard money lenders, or if you don't know how to do this, you don't know any wholesalers, you don't know how to, all this stuff, where are you going to learn, right? You can't just continue to come here every Thursday and think that you're going to be able to go out and just, kill it. That ain't happening, right? I'm not where I wouldn't be where I'm at if it wasn't for my network. And it took one deal, my very first house, to realize that I need some damn help. I need to be around people that are actually doing this thing. I can't just go do what I just did, buy a house, try to renovate it, learn all these hard things, right? That's not how you improve. You have to improve when you do these kind of things. And a lot of time that's depending on your network, right? If you're trying to do all this stuff by yourself, it can be tough, right? And those lessons are going to be even tougher. So your network is going to be very important. So yes, you can go find hard money lenders at meetups, but your best bet is also to go there to network and meet other investors, other contractors, other hard money lenders, other just people that are in the same position as you, right? This ain't nothing but a meetup every Thursday, 12 o'clock. It's the same thing, right? So go to your local meetups. You can find hard money lenders. Another place you can go, or another way you can find hard money lenders, is talk to real estate agents. Because a lot of real estate agents deal with investors, and guess what? When they're investors, you can buy on market deals with hard money. So a lot of agents deal with only investors, and not not potential homeowners, but investors. And guess what? If I'm a real estate agent, I'm dealing with investors, I have to know about their financing. I have to know, well, I don't have to know who they're using, but I do in a sense. But, that is going to be a great way to find hard money lenders is through agents, because they deal with investors who have that type of financing. So unless you're just completely oblivious and not looking for anybody, you're not going to find anybody, right? And that goes back to my point when I started this whole thing, this episode today, was put yourself out there. I put myself out there and I got a deal across the street from one of my rentals, right? You put yourself out there, you go to a meetup, you find a hard money lender, then that solves your financing problem, right? So putting yourself out there is the only way that you're really going to be able to succeed and also gain that network. Because the network, I'm telling you guys right now, the network is going to be equally as important, right? I know inspectors, I know appraisers, contractors, hard money lenders, inspectors. I know a lot of people, right? So, and that's because I put myself out there. So again, that's where you can find your hard money lenders. I know it's a long, drawn out answer, but I had to give you guys the full details in regards to where to find them, how to find them, why local lenders are more important than your national lenders, stuff like that. So appreciate y'all showing up. We got what is this? Poseidon 706 join. What's going on? MK the Mobile Home Plug says facts. Mark from Day, what's going on, Mark? We got Kevin Noble in here. What's going on, Noble? Guys, if you guys didn't know, Kevin Noble is very rich and he has a lot of homes. So DM him and ask him how he built his real estate empire. I try to learn from him. That's funny. Anyway. Oh boy. Anyway. So yes, that's how you find hard money lenders. Any other type of financing, like your bank loans, obviously you can go through real estate agents, and we've talked at length about the different types of financing. Again, I prefer hard money when I'm doing my renovations. If I'm doing anything that requires like construction costs, I prefer hard money. It is what it is, right? I have a lender that is consistent. And here's let me go a little bit more in detail about the hard money piece, right? When you find a hard money lender, right, most of the time they're not going to need the criteria that is equal to the bank, right? Because banks are nationally regulated. They have stipulations and all that kind of things that require them to only lend to certain people, right? Hard money lenders are just businesses that lend money, essentially. Right? And some have their own money and some have money that investors have given them to lend to you. So I might have $1 million and I might go to you as a hard money lender and say, hey, I got $1 million. I need at least, 5% back off this. Right. You go take that, or I need at least 8% or something like that, right? You take that $1 million and you go find somebody that's looking to flip a house and you go lend them, $150,000 at 12%. That's how they make their money, right? So some lenders have their own money, some are borrowing other people's money, right? And so when you go and talk to a hard money lender, they're going to require, they're going to see your income, they're going to see your credit. They're going to see how much money you got. Those are the three things, right? And a lot of it is a case-by-case basis. A lot of it is just based off relationship, right? This is the whole reason why I say go to a local hard money lender instead of a national hard money lender. It's based off relationship, right? If you've never done a deal, you're probably going to pay a premium to get it to allow them to lend to you, right? And only after you've done a couple deals where they soften up that interest rate. So you might come in at an interest rate of 12%, right? Whereas I've done deals, I can show them I know what I'm doing. I might get 10 or 8%. You know what I'm saying? But don't be alarmed by that, because again, it's just based off the fact that it's a business relationship type way of lending money, right? My hard money lender, I didn't do any deals before that. I did one deal before that, but I didn't really, I was still fresh. and they took me out to lunch, and it was an interview. That's how they figure out whether they want to lend to you or not. And they can tell, they do it so much, they interview so many people so much via lunch, that they're able to figure out who's a bullshitter, who's not, right? Are you really trying to get in this, or are you just blowing smoke up my butt, right? That's how they figure out they're going to lend to you or not. I might not have had a lot of money in the bank. I might not have had a job at the moment. I might not have had perfect credit, right? But they believed in me, in my message, and what I was trying to do, and they felt the genuality, and they said, this kid, we believe in him, let's lend to him. I think he's going to be okay. He's a risk, but he's okay. You guys can be in the same position, right? Because again, also remember, their job is to lend money out to you, not to hoard that bread, right? So those are some of the things that you're going to have to, that you will be required to show them. But it's a lot less stringent than if you were to go to a bank, where a bank is going to want a lot of things, and there's not going to be too much leeway. It's either you get it, it's either you're approved or you're not approved, right? Underwriting can be very tricky. So that's the difference between, going to a bank for financing and using a hard money lender. I use hard money. You don't have to use hard money, but that's what I use, right? Whenever I'm doing my renovations, if I want to spend money to renovate something, I'm probably not going to want to use my own money. So I'm going to use hard money, right? Again, if you use a conventional product, there's no renovation money there. It's coming out of pocket. The pro side to that is that you get your equity in the house and you're in a long-term loan, so you don't have to worry about refinancing. FHA product, great product, right? Especially first-time home buyers. You guys should really take advantage, especially if you're looking at house hacking, because you get low down payment, low interest, and if you get the 203K leg, you get the renovation there. You get the construction cost in there too. So that's a great product, but it's all going to be dependent on the deal and your intent. Me personally, this house that I'm in, right? I got this deal off market, right? And I don't know if you guys have seen this house, but I renovated this house earlier in the springtime, right? Full renovation. No, I renovated majority of it. I converted it was a 3-unit, and I converted it down to a 2-unit, and we're living in the second and third floor, and then I'm going to renovate the first floor in the basement and turn that into an Airbnb. But the whole point is that this house, I did not use hard money, right? This house was all personal money. And the reason for that is because this house, when you're using hard money, you can't use hard money for your own personal residence. There's people that have, but I wouldn't recommend it, right? So it's got to be for an investment property. So I couldn't use hard money on this. I would have loved to, because I wouldn't have had to come out of pocket for the renovation money. But nonetheless, I had to come out of pocket, basically. So this was a conventional product, right? So I was able to get a long-term loan. Remember, conventional is long-term loan. I was able to get a long-term loan. Don't have to worry about refinancing. And I got the equity in the property immediately, because you got to put down 20%, right? So that's the great part about that. But renovation-wise, I couldn't do that. And again, if I was using hard money, it's a short-term loan. It's only usually 12 to 6 months, high interest, and I have to find a way to pay that back, right? That wouldn't be an ideal situation for this house if I was living here, right? If I'm living here, then I need a loan product that's going to last me for a while, right? So that's why the conventional route was the best route for this house. As opposed to my rentals, I'm usually more than likely 9 times out of 10 using hard money. I bought one rental with cash, but that's just because I got it at a great deal. So depends. That's why I say hard money, conventional, FHA. It all just depends on the deal and your intent. My intent here was to be here, live here, right? Live here for 5 years, right? So that's why I'm doing that. Let me see. What's going on, Mike? Appreciate you showing up, brother. What's going on, man? Mike's out here flipping in Baltimore, doing his thing, man. Appreciate you showing up, brother. Devin says, do you have to go through a permit process for building, renovating a multifamily home? Yes, you do, right? And I live here in Baltimore. Baltimore is, you need a permit to walk across a damn street here in Baltimore. They want permits for everything. Guess what permits do? Permits cost you money. If it costs you money, that's more money that's going to the city. They're making money off of you, right? They're making money. So if I say, look, you can't even, you know, you can't even change a window out of your house without getting a permit. You can't, do any demolition in your house without a permit. You can't, you can't put a piece of drywall up in your house without a permit. You can't change out a couple electrical outlets without a permit. And then guess what? Everything you do is going to require a permit, right? That's just here in Baltimore. What I would advise you to do is go to your city website, go to your permit, go to the permit page and figure out what's required for permits. Devin, I know you're in Texas, so I don't really know what code is out there, but you can renovate houses via no permits, and you can renovate houses with permits. I've renovated. I've done both, and the times where I haven't pulled permits, not every time, but I have been jammed up with a stop work order once or twice. And those are not usually fun, but they come with fines sometimes. But luckily, the one or two times I got caught, I didn't have any fine. They didn't fine me. I just had to go pull the permits. And permits are in place to make sure that stuff is being built the right way. Right? Do you look to see if properties have already permits? Already have permits before purchasing? No. Well, you can always go pull up the permit history of a property, but if you're looking to buy it and you're looking to do work on it, that's something that you're supposed to do, right? If you're like, if I'm going to go renovate, if I have this distressed house and I plan on renovating it. After I close on it, I have to go, whatever I plan on doing in there, whether it's demo, putting drywall up, any framing, any rough-in work, HVAC, all that, I have to go pull those permits, or my GC has to go pull those permits. Permits are pulled, when you intend to do work, right? Permits aren't, you have to buy the house, or that has to be you that's looking to do the work in order to pull the permits. You can't go off of a previous permit or whatever because the work's already done, right? You might pull up a house and it has 20 different permits, but they're all closed out, or it should be closed out because whatever work they were pulling the permit for is already closed out. It's already done, right? So any future work that you plan on doing after you purchase the house, that's when you pull the permit for that future work. And permits can range, they can cost there's cheap permits, there's expensive permits, right? Your permits where you're probably going to need a licensed contractor is your specialty work. So your HVAC work, your plumbing work, your electric work, any structural work, you're going to need like a licensed contractor, or a licensed plumber, a master electrician. Those are the guys that are going to be out, you're going to have to pay to pull those kind of permits. So let's say in this house, let's say you have a house that you plan on renovating and it doesn't have central AC, right? You are going to have to pull a permit to get a unit, but you can't pull it. Your GC or the master, whoever HVAC guy is going to have to be able to pull it. You can't pull it because it's a specialty trade, right? But you can pull other things, right? Like if I wanted to, put a wall up, frame a wall across, my living room and put drywall up, I can pull that permit. I can, say, hey, I'm gonna do a little bit of frame. I'm gonna do like 10 feet worth of framing. I'm gonna put, 6 sheets of drywall up. You can pull that kind of stuff. I pull my own permits, with the exception of my specialty trade stuff, which I have my guys do that. But yes, permits are something that, they cost money, and more than likely, once you pull the permit, you're gonna have to get an inspection after it's done. Right after the work is done, you call the people and you say, hey, look, I'm done with the work. I have an open permit. I'm trying to close it out. You got to get an inspection. They'll come by and make sure everything looks kosher, dandy. Permit's closed, right? The conscious battle that people have to play is really your risk tolerance. Yes, permits cost money. Inspections cost money. If you plan on pulling permits, guess what? You better expect to have your guys do the work the right way, because it's got to get inspected, right? And if they, you don't want to go out of line either. So buying houses and renovating houses, people are usually charged with the decision of, do I pull permits or do I not pull permits? I've not pulled permits and I have pulled permits. When you don't pull permits, you're constantly a little paranoid, You're telling your guys, hey, don't dump any trash outside. Don't leave any debris outside. Don't leave any debris on the porch. Make sure the doors are closed throughout the rehab. Make sure you guys keep the windows closed during the rehab. Make sure you guys aren't leaving any construction debris outside. You want to keep the doors closed. All that stuff is because you are paranoid because you don't have permits. And if an inspector drives by your house like they do in Baltimore City all the time, all the damn time, and they see, this house that's considered vacant, or it's in their district and they've seen this house being vacant for, months on end. And then next thing you know, they're driving by and they see, guys going in and out of the house with 2x4s and all that kind of stuff. And they're like, what's going on here? Looks like they're doing some work over there. Oh, I'm going to go pull up my computer, pull up that address and see if they have any open permits. And once they see that you don't have any open permits, they're going to say, oh, this motherfucker ain't got no open permits. But these guys in here look like they're working. Stop work order. Bam, you just got whammed, right? And depending on the inspector, they could really screw you over, and you have to spend $1,500 off a violation of stop work order, right? That's from all not pulling permits, right? When you don't pull permits, you have to be on your P's and Q's. In some areas of your city, the inspectors might be lax and they might not be rolling around like that. And you could probably get away with doing a rehab if you're in and out quick, right? And you are cautious and making sure your guys don't leave things outside. But there's other areas that are a little bit more stringent and where you just not going to be able to get past, do a rehab and not pull permits because there's so many eyes on your project. Also, another thing, and I've been whammed by this before, it's not even the inspectors you really have to worry about rolling around and patrolling and seeing you guys doing doing work on your rehab. It's your neighbors. Your neighbors will snitch on you. People in the neighborhood will snitch on you, right? And the way they do that, and I can only speak for here, but I can imagine that it's like that in any of these other cities that you guys are in. Quick break. Hey, what's going on, Lexi? What's going on? Sheila, DJ Play. What's going on, brother? Scott, Skyride Bliss. You know what I'm talking about. Hey, appreciate y'all showing up. This is Real Estate Q&A sessions every Thursday, 12 o'clock. We're past our time, but we're still rolling here. If you guys are new here, if it's your first time here, you can ask anything, everything real estate related. I'll do my best to answer it. This is a safe space for you guys to get free knowledge, free gems based on the real estate game. Anything you're trying to do, buy your first house, your 10th house, renovate, wholesale, flip, whatever it is, you can ask those questions here about how to do it, when to do it, whatever the case may be. This is your space. This is your time. This is how I help out the community. So do what you need to do. Ask any questions as you so please. I will continue to talk though. But you can always ask at any point in time and I'll answer your question. That's for the new folks. Also, housekeeping rules. If you are here, we do this based off the community. This is for you guys, right? The only way to spread this is to let everybody know is to screenshot this. Screenshot me right here talking right now. Post it to your story. Tag me and let folks know what we're doing every single week. Dropping these gems for y'all for the free ski, right? In the real estate game, right? So anyway, what the heck was I talking about? I know I was talking about a lot. Oh, so permits. When it comes to permits, yes, you want to. So if you don't pull permits, you run the risk of getting caught, right? If you do pull permits, you have nothing to worry about besides making sure that the work is done the right way. And I'll give you an example of somebody who did not pull permits, right? And they got caught, right? So imagine that you have a rehab. Right? Imagine you have a rehab and you have to put drywall all throughout the house. right? And you got to do some electric. Usually you do rough-ins and then you do your drywall. So let's say you're rough-in. Let's say you got to run some electric wire and all that kind of stuff, new outlets and plugs and stuff like that, GFIs. Let's say your electrician did all that, and then you covered up the walls with drywall throughout the whole house, but you didn't pull permits, right? You didn't pull an electric permit, right? And you didn't pull a drywall permit. So let's say you got guys, running around here, whatever, around the house and banging and all that kind of stuff. Your neighbors hate it. They get tired of hearing all that noise every day, and they call 311 on you. They basically call the city. This has happened to me before. They call the city because of all that damn, all that damn noise, right? Or they just hating. Oh, that motherfucker over here building this house. My house ain't renovated. It happens. I'm trying to tell you guys. This happened twice to me. Neighbor snitched. Anyway, neighbor calls the city, says, hey, loud noise coming from this house, blah, 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 blah. City comes out. They see your guys working outside. They pull up the computer, see you don't have any permits, right? Then they put a stop work order on you, right? You pay $1,500 fine. There you go. You're screwed on that, right? And then when you do pull your permits, You've already put all that electric in the wall and covered it up with all that drywall. When you do pull your permits and the inspector comes out to clear those permits and they say, oh, well, you laid new electric in here and that wasn't inspected before you put your drywall up. Rip out the drywall. We need to see the electric work. What? That happens. That has happened. Right? So imagine you just laid 100 sheets of drywall in the house. You covered up all the new electric wire that was ran. And the inspector says, well, we didn't get a chance to inspect this before you closed up the walls. Rip up the walls. That is going to destroy your budget. Right? And you're already in the whole $1,500 for the stop work order. Right? And now you just lost money off material and labor, because all your drywall has to be ripped up. That is how you screw yourself. That is what you risk if you do a rehab or do any work on a house without pulling permits and you get caught. So that is completely up to you, your discretion, whether or not when you buy a rental or a flip or you're doing a flip. Remember what I said here today, right? I don't know if you guys leave out of here, remember the shit that I be talking about. I don't know. I mean, it's up to you guys, right? But if you do, remember this. If you do work on a house, understand the risk of pulling a permit and not pulling permits, right? I'd pull it, right? Peace of mind. You can't pay for peace of mind. Well, yeah, you can. You can pay for peace of mind. You pay that money for the permit. You got a little peace of mind. But that, I have learned to pull my permits. I pull them, And yes, you're going through extra steps. And yes, you got to make sure stuff is exactly right and tight. And yes, you got to go pay for the inspections and all that kind of stuff. But guess what? It's all with the intent of make sure that you're doing things the right way. And if you're not planning on doing things the right way, you're probably one of those people that's probably not going to be pulling permits, right? It is what it is. It doesn't mean that if you don't pull permits, you're not doing things the right way. But there is that tendency. There's no checks and balances there. You can go your guy. You might not know anything about renovations or electric work or whatever the heck, right? And you didn't hire the cheapest subcontractor out there, and they go and run wire all up through the house, and you don't know their expertise, but they didn't talk you up. They didn't talk you over and made you made you feel like they knew what they were doing and that they were it happens, right? And then you finish the house, and then your wire's all screwed up, and then you get a damn house fire, right? It happens, right? Because your electrician didn't know what he was doing, and you went and hired the cheapest dude that just ran some wires anyway, all way, right? The permits are there for checks and balances, and they allow inspectors to come in there to make sure that your guys, the guys you hire, are doing things the right way. So it's up to you, right? Usually cheapest work ain't the best work. You're going to have to spend money in this game. It is what it is. Ooh, I got some topics I want to talk about. Dang. I don't think I should talk about them right now. Anyway, we got a couple people to join up in here. Nadia, what's going on? Oh, Sheila says, trying to prepare to buy my first home and or duplex to rent out. What is the best way to prepare? What do I need to do first? In the note says, what's going on, Torin? Hello, man. Appreciate you showing up. Hey, guys, this is real estate Q&A sessions every Thursday, 12 o'clock for an hour. I think I'm going past that because I think IG has extended recording time for live sessions. So we got some more questions in here, so I guess I'll end up staying on here. But remember, this is each and every Thursday. Screenshot this, post it to your story, tag me, and let folks know what we're doing each and every Thursday, dropping these gems for y'all for the free ski. All right? So, Sheila says, trying to buy my first house and pretty much a duplex. What's the best way to prepare? What do I need to do first? First of all, understand, is this what you want to do, right? I always ask folks, when you're buying your first house, what is the intent? Why are you buying it, right? Are you buying it just because everybody else is buying it? Are you buying it because, you want to start investing? Are you buying it, because you want to rent one out? Whatever the heck, figure out your intent. Why are you buying this house? Why do you want to go buy a house? And is this house the type of house that's going to fit what you're looking for, right? I remember when I first started looking for a house and I wanted to, rent it out. That was my intent. I wanted to rent it out, but I was sitting there looking at single family homes. And then, I'm starting to think like, oh shit, I can live here, oh damn. But then that defeats the purpose of me renting it out and it being an investment property, right? And I luckily found a duplex, but I got my intent mixed up a little bit. So always know your intent, right? Why are you buying this house? So you're buying it for investing. Cool. The next thing you want to figure out is what's your budget, right? I mean, what can you afford? Go online, go to Google. There's a million mortgage calculators and figure out what can you afford to pay, right? Because, more than likely you're going to probably end up with a bank loan, and bank loans, you're going to have to pay every month, right? You don't want to default on a mortgage. That's not good. But you want to figure out what you can afford to pay. So you go in your mortgage calculators on Google, type in, purchase price $150,000, and you put an interest rate. It's going to require you to put an interest rate in. Your interest rate, put anywhere. I mean, right now, depending on your credit, you can get interest rates as low as, 2.5%, 3%, all the way up to 4%, 4.5%. So I do something in the middle, 3.5%, right? If you got decent credit. And you start just plugging and playing numbers and seeing what price point you can afford, right? What price point you can afford, so you can start looking at homes at different price ranges that fit your budget, right? That's what you want to do. The next thing you want to do is, now we're talking about financing, right? We're talking about financing. Now you know what you can afford. Now you go to a bank. You go to your local bank. Whatever bank you bank with. Some people like to have their primary bank different than their mortgage bank, because they don't want all one bank handling every single thing that they have. I'm one of those kind of people. I got 4 banks. Some banks I ain't got money in there, and some banks I got a little money in there. It just depends. All different banks offer different things, right? So you're going to call a bank or multiple banks, because now you're in the shopping mode. You're shopping now. You're shopping for a home loan. You're shopping for a product, right? All banks are not created equal. All banks are not going to offer you the same thing, right? You're going to shop around for the best interest rate. So you're going to call your Bank of America. You're going to call your Wells Fargo. You're going to call your Navy Federal Credit Union. You're going to call your local small bank, and you're going to figure out, hey guys, what do your conventional products look like? What do your FHA products look like? What kind of home loans do you guys have for primary for primary residence? Those kind of products you're going to be looking for, and you're going to be comparing interest rates. Some banks might offer you 3.5%. Some might offer you 2%. Some might offer you 4%. Right? You want to shop, because your interest rate is going to directly affect how much you pay in mortgage every single month for a very long time, right? And there's some that have fixed rates. Some have some products are fixed rates. Some products have interest rates that fluctuate with the market. Just depends, right? What you choose. But that's why the interest rate is important. That's why you shop. It's just like a car. You looking for a car loan, you shop around, right? You shop around. So basically, yes, you're going to shop. You're going to go get your pre-approval. You're calling banks for your pre-approval, right? How are you going to buy a house if you don't know what you're pre-approved for, right? You call a bank, you say, hey, look, I'm looking to buy a house. I'm looking to get a pre-approval to buy. I want to get a pre-approval for a home. Most banks at this point in time right now is so streamlined that you can apply for a pre-approval now and you can get an answer tonight or tomorrow, and they will let you know what you are pre-approved for. A pre-approval is nothing but a document that says that you are pre-approved to buy a house up to this amount. This is what we are willing to lend to you at X rate, right? How are you going to go buy a house if you don't know how much money a bank is going to loan you? That's why you go get a pre-approval, right? You go get a pre-approval. You can go get a pre-approval today. Go take some action. Go get a pre-approval right now, even if you're not looking at buying a house right now. If you're not looking at buying a house right now, you can still go get a pre-approval. Let's say you're thinking about buying a house in 6 months or next year, right? Still go get a pre-approval, because what a pre-approval is going to do is let you know where you stand, right? You might go get a pre-approval today and only be pre-approved for $200,000, but it's because you have some debt. Maybe your credit is not where it's supposed to be at. Maybe you don't have enough money in the bank, whatever the case may be. And so you say, okay, I at least know where I stand. Even though I'm not trying to buy a house right now, I at least know where I stand in regards to what I can afford. I mean, not what I can afford, but what the bank is willing to give me. But I'm in an area where I want to buy a $300,000 house. So if my intent was to buy a house in the next 6 months or year, I at least know where I stand, and now I know what to work on and then I go get a pre-approval after I worked on my credit, worked on building up a bigger reserve and all that kind of stuff, right? And then in the next, when you're ready to buy a house, you worked to get to a point where these small things are better. You get another pre-approval, and then maybe you're approved for $350, right? Now you have, you have this pre-approval. You can go and buy a house up to $300,000, $400,000 if that's what the pre-approval letter says you are approved for, right? And just because you're pre-approved for $500,000 or $500,000 or $250,000 or whatever, doesn't mean you have to go spend that money. Right? It's just like a car, right? They can approve you to go buy a $50,000 car, but does that mean you go buy a $50,000 car? You can go buy a $30,000, 20, 10, whatever the case may be, right? But you go get a pre-approval. That's the first step. No agent's really going to want to rap with you or talk with you. They can, they might make it seem like it, but I'm an agent, right? We don't really want to rap with you unless you got your stuff together, right? And having your stuff together means you have your pre-approval. If you have your pre-approval, that tells an agent you are ready to buy right now. Because once you have that pre-approval, you find a house, you go to the bank. Let's say you get your offer accepted, you go to the bank, they lend to you on that deal. Now you're under contract. Pre-approval is all you need to go start looking at homes, right? That's all you need, right? Pre-approval. You can get a certain amount of pre-approvals within a specific amount of time. Don't quote me on this. I think 30 days. You can get at least up to 3 pre-approvals, and it won't affect your credit. When you do get a pre-approval, it is a hard pull. Nothing wrong with that. You're going to have to do that anyway if you get an auto loan, a house loan, whatever. It is what it is, right? But you can get, the reason why I say shop is because they allow you to get a certain amount. I think it's 3 within 30 days or 60 days or something like that, to where you can go and get multiple. That's why I say shop around without it dinging your credit. You get one ding, right? And as long as you get at least 3 pre-approvals within that time frame, guess what? It's not going to ding your credit. So I'm giving y'all the keys to the game. What's going on? We got some folks come up in here. Kid next door. What's going on? Ryan, the only Don Yon. The only Don Yon. W Ghost, what's going on? Awesome Sauce, what's going on? Hey, Wilson alumni. Kata King, what's going on, brother? From Group Me. Yes. So you get your pre-approval. And if you guys are new here, if you guys are just joining in, I've been going on for longer than an hour and a half. Normally, I don't really do this. It's usually an hour, but it's free gems and you guys are engaged and we got some folks in here. If this is your first time, ask questions below. There's a question mark there. This is the only way you guys gain knowledge. Just free bread, just free gems, right? I'll do my best to answer everything real estate related. So if you're buying your first house, your 10th house, you plan on renovating, flipping, selling, wholesaling, whatever the hell you want to do, this is the space. And also, I've only got one housekeeping rule. Screenshot this photo, this screen right here with me on it, and drop it in your story, tag me, and let folks know what we're doing, because that's how we gain knowledge. That's how we, figure out things that we might not have thought about. Because if somebody comes here and asks a question that you thought or you never thought about asking, and I answer it, boom, there's more bread and knowledge for you. So the intent is to grow this, continue to grow it. We're 27 weeks in. Thank God I do this for y'all, right? Free gems, free smoke for everybody, right? So back to the original question. The question was, what are some of the things I need to do to prepare to buy a house or buy this investment property? What did I say? Figure out your intent. Figure out your budget, right? Go look at a mortgage calculator on Google and figure out your budget. What can you afford, right? Then you go get a pre-approval, right? And then you link up with an agent, right? You link up with an agent and you say, hey, look, this is my criteria, right? The agent says, okay, cool. You and the agent go find a house. Then you put offers in on the de-house and you get under contract, whoop-de-whoop, boom, boom. There it is. But the main part, the preparation part, is important, right? You don't have to wait until you're ready to buy a house to go get a pre-approval. Remember, it's all about figuring out where you stand. I don't know what I can buy or what the bank's going to lend me if I don't have a pre-approval. So go get a pre-approval, even if you're not interested in buying a house right now at this moment. Let's say you want to buy a house next year, right? Figure out at least where you're at or where you stand so you can work to get more. Right? You might want to go buy a $750,000 house, but maybe you're only approved for $500,000, and maybe it's because you got a couple dings on your credit. Well, at least you know that right now, so you can work toward getting that $750,000, getting pre-approved for $750,000, or maybe you can work on creating more income, right? Creating more income during that year time, so the bank offers you more money, right? So. Little tidbits. Awesome Sauce says, are you a realtor for all of Maryland or just Bmore? I am licensed in the state of Maryland. So anywhere in Maryland, Cumberland, Hagerstown, Baltimore, wherever. If it's in if it's in Maryland, I am licensed in Maryland. Right. So when you're talking to agents, you are their licenses are based off the state. So I am licensed in Maryland. I'm not licensed in DC. I'm not licensed in Virginia. I have to take two separate tests. They're all different tests, but I am licensed in Maryland. So any house in Maryland, when it comes to real estate transactions, I can take part in. Hope that answers your question. Poseidon 706 says, do you recommend operating under an LLC? Yes, I do. I do recommend that. I made my first mistake. In fact, should I go to the board? Man, LLC talk. Last time I had the LLC talk, I had went to the board and showed you guys a quick little structure of how, people structure their LLCs with their businesses and stuff. The only thing about that is that whenever I write on this board, like when you guys see this, it's backwards, right? It's backwards. That's from last week. I didn't erase it. That's backwards. I don't know. Real quick, I know you guys are want me to answer this question, but I want to test something out here. I'm going to flip this camera and let me know if it reads the right way. Because right now the camera's facing me, right? It's facing me, so it looks backwards to you guys when I write on the board. So if I do this, well, hold on. Okay. If I do that, does the board read the right way? Put a thumbs up if it does. Put a thumbs down if it doesn't. Does it read the right way? All right, let me know. Let me know about that, please, so I can decide whether or not I'm going to go right on the board. It read the right way? Did it? Oh, it did. Okay. You know what? Whatever. I'll just do it. Board time. You guys always give me to write on the board, and when I don't intend on writing on the board. So, let me get on here. I hope you guys came last week. And if you missed last week, I advise you to go on my timeline and look up this equation, because this equation shows you how to evaluate deals and get your cap rate and ROI before you even go look at a deal. You can figure out whether a deal is worth it or not, right? Your time is important. You can't sit here and be looking at and evaluating and spending time running numbers on every single damn deal that pops up or somebody gives you, right? You gotta preserve your time, and a lot of these deals are sucker deals. You don't want to buy a sucker deal, right? And before you go get in your car and spend all this energy riding around and all that kind of stuff for a deal, evaluate the deal first and figure out whether it's going to offer you the right return on your money, right? And the way you do that is by that equation. Go look at last week's episode on my timeline. What you said? Oh, turn the camera back. Oh, yeah, you're right. Sorry. Hold on. Okay. Now, I cannot see the screen. Snappers. Hold on, guys. I cannot see the screen. But I think, is that good? Yeah, I think that's good. I can't see it now, but I'm gonna trust that it shows what it's supposed to show. So, LLC structure. LLC structure, right? Is that good? Is that good, guys? I hope it is, because I cannot see the screen at all. So, the reason why LLC structure is important, because when you're buying a house, let's say you're buying your own property. Let's say this is your forever home. You want to live in it. Doesn't matter. You put that house in your name. Doesn't really matter, right? It's your house, whatever the heck, right? You can buy rentals in your own name, right? But the problem comes where if you buy that rental and somebody wants to sue you, a tenant wants to sue you, they're coming after you, and that house belongs to you, which therefore means it's an asset of yours. So they can take that asset if they need to. That's the reason why people put their rental properties and these houses under LLCs, because they offer a veil. Now, let's not get it twisted. And I don't know what you've heard before and all that kind of stuff about LLCs offering protection and all that kind of stuff. Yes, they do to a certain degree. LLC, just because you have something in an LLC does not mean you are fully covered in, they can't come after your personal stuff. That's not true, right? LLCs have been around. Lawyers have been around. There's ways to get to you if need be, if you just have one LLC, right? So what you do is you create veils, right? Barriers, right? And so, when I bought my first house, I bought my first duplex under my name. I didn't know until after, when I started learning this kind of stuff, that I shouldn't have done that. Now, it's not a bad thing, but I can't really go back and change it, right? If you buy a house with a bank loan and you put your name on the house, that loan belongs to you. If you come back and try to change the name on the house and you still are paying on that loan, once you start making payments, if you buy your house as John Smith, whatever, John Smith is expected to pay that loan. But if you buy that house under John Smith and then later you go change it to John Smith LLC, the bank is going to be like, who the hell is John Smith LLC? That's not who owes this loan. That's not who's on this paper on this loan paperwork. And what you'll find is that there's a clause in the mortgage, in your mortgage contract. It's called a due on sales clause, right? Due on sales clause means that they have the ability to call the loan at any point in time throughout your loan term. And when they call the loan, that means that they can at any point in time, something fishy going, they can literally say, today, the remaining balance of your loan is due. And what will trigger a due on sales clause or them calling the loan is if you change the name of the person that is responsible for that mortgage. right? So if you got John Smith is the name of the owner who bought this house that's on the deed, and then you go and change it to John Smith LLC, and then let's say you miss a payment or you're late on a payment, and then they see that on the deed it's a different person, oh, they coming for you. So if you guys didn't know, that's a little, that's some knowledge right there, right? That's why if you do have a house in your own personal name right now, most of the time it's not worth it to try to change it to an LLC. So guess what? That one house that I have is still in my name because it's not worth changing it to an LLC. So it's best to have it as an LLC before you start than after, right? So keep in mind that whenever you buy a rental property. So obviously you can buy a house in an LLC and you can do just like this, you can say, here's your house. That house is bought by, Main Street LLC. All right. That house, this LLC, is owned by you. Right? Can y'all see that? I don't know because I can't see y'all. But that house is owned by you. You right here. Right? You right here own Main Street LLC. Main Street LLC owns this house. Right? So essentially, you don't own it. The company owns it. But you own the company. What you can also do from here is go and buy more houses. All under Main Street LLC. Right? Main Street LLC owns 1, 2, 3 houses, right? You own Main Street LLC. Simple. You can go buy multiple properties and put it under an LLC, right? Instead of you putting it in your name as if you were to do this, you have a house like this. You go from here. Here's you. There's no protection for you from being sued and your house being taken if this is the route that you go. And that's with you as the owner owning the house. But when you have the LLC own the house, or the house is, there's at least a veil there. There's somebody's got to come after Main Street LLC because Main Street LLC owns assets. If I'm going to take assets out of Main Street LLC, I can't necessarily go to this person, to the person that owns Main Street LLC. I got to go after Main Street LLC, right? So I can take away a house in Main Street LLC and still have these two houses and you not be affected to a degree, right? I can take all these damn houses, and guess what? You still have your own stuff, assets outside of these houses that are protected. Right? And in this scenario right here, if you own other assets, let's say you own other assets and maybe a home, a primary home, and this is an investment property, guess what? If you have a tenant here and you get sued for whatever reason, and they say, well, we're suing you because you own this house. You get sued, which means they can not only come after your house, but they can come after your other assets. They can also come after your personal home, right? So that's why this way offers a degree of separation between your own personal assets and home and your investment properties. When you have investment properties, guess what? You're liable to be sued for anything, everything under the damn sun. Just happens, right? Nature of the beast. You can't come up in this game if you're trying to be a little dog. You need to be a big dog, right? So I'm going to show you another advanced way that people are starting to do. What I have right now, my structure is I have an LLC and I have all my houses under an LLC. Yes, it offers me protection. Is it full protection? No, right? Because if I have a bunch of houses in one LLC and somebody decides to, screw me over on whatever, they want to sue me for whatever, they can take all the houses. Possibly, potentially. But I got lawyers, so don't try it. Let me show you another way that you could set up your your real estate empire. This eraser sucks. Let me show you this one other way. There's a little bit more steps, but adds more protection, right? You go get an LLC for protection. That's why you go get it. You don't get an LLC because it sounds cool to say LLC, right? You get an LLC for protection and tax purposes, right? So one way that you can do this and set up your real estate empire is this way. This is you, right? That's you. You, right? You own this LLC right here. You own this. Damn it. Excuse me. You own you own this LLC. Parent LLC. You own Parent LLC. Right? That's your Parent LLC. It's like an umbrella, what I'm about to show you. You own Parent LLC. Parent LLC owns other LLCs. Right? So Parent LLC owns, 1, 2, 3 main. No, let's just keep it simple, guys. Parent LLC owns LLC1. Parent LLC also owns LLC2. Parent LLC also owns LLC3. You can do this, right? We still ain't talked about no houses yet, right? So you have a parent LLC, like an umbrella LLC, or parent company that owns other LLCs. What do these LLCs own? These LLCs own properties, right? So LLC 1 owns 1 rental property. LLC number 2 owns 2 2 properties. And let's say LLC 3 owns another property. That is horrible problem. I'm a little perfectionist when I get on the board, sorry. There you go. Guess who owns these houses? Not you. You don't own none of these houses. These houses are owned by the individual LLCs that's on the deed that owns these homes. So Parent LLC does not own this house. LLC number 1 owns this house. Not you, not Parent LLC, not LLC number 2, not LLC number 3. LLC 1 owns this house solely. That's it. LLC number 2 owns these 2 houses solely. That's it. LLC number 3 owns this house right here solely by itself. Who owns all 3 of these LLCs? Parent LLC. Right? You can set this up. You can do this. Right? Parent LLC owns all 3 of these LLCs. Who owns Parent LLC? You do. So you're creating layers of separation between your investments and you yourself. Basically your assets and you yourself. So if I have a bad tenant in LLC 1 and for whatever reason they sue me, and let's say I'm negligent and wrong and all this kind of stuff, and let's say they want to get, say screw you, we're gonna take your house. They can't take my house. They can take LLC 1's house. Gone. Right? I might end up losing the LLC. Maybe, maybe not. Right? But this is all that can be taken. That's it. Just this. This right here. This is all that can be taken because LLC 1 owns that house. Not Parent LLC, but LLC 1. Same thing with these other LLCs. So you're just creating degrees of separation for you, between you and your assets. And this is a great way to set up your company, right? You don't even have to do multiple houses in one LLC. You can do an LLC in each house for each house, right? Now, tax purposes is going to get a little wild, but you got to stay organized if you do it. But it's nothing to go create an LLC. They're usually $120, $150, not that much, right? But the thing with LLCs is that when you go create them, you don't have to create fancy names. Maybe your parent LLC is like whatever name you want it to be. Like my company, Mayes Capital Investments. That's my company name, right? But here, these individual LLCs, like if you do LLCs for each house, the easy way to name it to where, because LLCs are registered businesses in your states, and if the name is taken, you can't use it. So the easiest way to create an LLC with a name that's not already taken is just use the address of the house as the name. Remember, you're not getting hung up on that. You're not getting hung up on the name. Yes, it is a business. This is a business, but you're not buying it for the purposes of it being a savvy name business. You're buying it because you want this LLC to own that house, right? This could be a fancy name, whatever you want it to be, but this one, these down here, you don't care, right? So if the address of the house is 123 Main Street, you go create an LLC that's named 123 Main Street LLC. Chances are, 9 times out of 10, that is the only road in your state that has that name with those numbers. So that's how you go create LLCs. That's how you get your LLCs to own homes, not you. That's how you get your individual LLCs to be owned by a parent company, which is then ultimately owned by you, right? If somebody comes after parent LLC, guess what? They take all of this. They take all of this, but they don't take you. They don't take your stuff. They don't take your assets and home. They take parent LLC or these individual LLCs. So that's how you can create structures within an LLC. That's how you can buy and not have houses in your name and be liable or held liable if something were to happen. Doesn't mean that one LLC is foolproof and completely absolve you of any wrongdoing or prevents the people, the feds, the government, whoever from coming and taking your own personal assets. That is not true, right? LLCs do not offer complete protection. Go look it up online. I don't know what you guys have heard on Twitter, whatever the heck, but that's not the case. Lawyers have been around forever. LLCs have been around forever. Don't think for a second that they ain't found a way to be able to get your shit, if you are using LLCs. Or using one LLC. So I hope you guys could see that. I don't even know if you guys are still live here. Damn, you guys are still live. Damn. Hold on. You guys are still live. Damn, that's crazy. I feel like I was talking by myself. Appreciate y'all for showing up. Hey, y'all still here. Let me see. The way you turn the board allows. Yes, looks like we had a couple people walk up in here. Ruse, what's going on? Or El Ruse. Milan, what's going on? Appreciate y'all for listening to me ramble. Listen, I this is only supposed to be an hour. I think I'm going on an hour and 45, right? And it's probably because Instagram has deprived me of more than 60-minute videos. I can't do 60 minutes. Not before, I could only do 60-minute sessions. And now they're just allowing me to rock out pretty much. So this has been going on for, I think this session has been going on for about an hour and a half. But I appreciate you guys showing up, and I hope that right there was beneficial for you guys. If you guys got to screenshot it, do what you got to do. But that is a great way to set up your LLCs and your businesses for your homes, right? For your rental properties, or for wholesaling, right? When you're wholesaling, guess what? You usually use an LLC name. Well, you can you're more than likely using an LLC name if you're wholesaling and putting houses under contract. So again, That's how we do it. Appreciate y'all, man. Thank y'all for sticking around. I know it's been a long time. We don't usually go this long, but again, if I'm feeling in the mood or if I don't have anything to do, which I do, I have to go back out. I literally was out and I came back in to do the show and I got to go back out again. But yeah, this is for y'all. I don't do this for me. This is for y'all. So the only thing I ask you guys is screenshot the screen right now. Post it to your story. Let folks know what we're doing every week, every Thursday. 27 weeks in counting consistently each and every Thursday, 12 o'clock, answering anything, everything real estate related. That's how we do. That's how we rock. A couple last minute things. Let you guys know some updates because I know some of you guys are asking me about a lot of things, different weeks, different people. But yes, if you guys don't know about Clubhouse, I have a Clubhouse account. And I will probably be on Clubhouse doing the same thing. But there won't be any live recording. So that can't happen. It's not allowed. So if you're on Clubhouse, join me on Clubhouse. I will be on there. And I'll probably be doing the same thing at a different time throughout the day. Thing is about Clubhouse, if you know, you know. If you don't, you know. Don't worry about it. It's a platform that's not really advertised to the public yet. But if you're on there, feel free to join. I will be on there. Other than that, products. Well, we did talk last week about coaching and all that kind of stuff. I'm not doing any coaching, guys. It's a lot of work, a lot of responsibility. But I will be working on a small product for you guys for value. It's going to be fairly affordable, very, 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 very affordable. So if you want to get some real value and things like that, just be on the lookout for that. And then I have a wonderful idea. I have a very wonderful idea, and I will be sharing it with you guys when I put it on paper and map it all out and, get it going. But, there's going to be some things coming. Again, appreciate you guys showing up every week. This is Real Estate Q&A session every Thursday, 12 o'clock. If you guys liked today's episode, put a thumbs up. I don't know how many of you guys are in here, but put a thumbs up. Put a thumbs up. Let me know if you liked today's episode. Also, if you are looking to gain some more knowledge, go check out my feed. I post every single one of these episodes on my feed every week after the episode. And I usually put the titles down under there so you guys can search and find different topics that I'm talking about. So, again, keep it locked every week, every Thursday. Try to stay safe. Try to, keep your mind off of the elections. Whatever you got to do, just listen. Wise woman once told me, be different. Love is stronger. So that came from my mother. So, yes, try to show love, spread love. Obviously, I got Love Yours on. Appreciate y'all showing up. I'll see you guys next week, Thursday, 12 o'clock. Remember, feel free to ask me anything in my DMs if you need to throughout the week, and I'll post those questions next week. But, yes, come prepared. See you guys in a week. Stay safe. Go Joe Biden.